Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up in their names, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back, knowing that it's...
Hey everyone, welcome back to the channel. So today we're going to talk about manipulating the stock market or manipulating the real estate market. For me, I think that both have great advantages, and there are some disadvantages as well. But I also see that as advantages because I look at it from how can I use the disadvantages and make it an advantage in my life. I don't look at it as a disadvantage that I can't do anything about. So we'll get straight into it. I don't necessarily like the word manipulate. I feel as though you're just using certain strategies in order to get ahead, in order to do things in your best interest. But we'll go ahead and dive deep. Today we're going to start with the real estate just because I love talking about stocks. And so we'll get into the stock market right after. So for real estate, there are so many advantages to it. For example, there's a possibility of appreciation, which is typically about 4%. So that typically beats inflation on a year-to-year basis. And I said possibility because, yes, there is real estate that may go down in value. Maybe the upkeep is wrong. Maybe the neighborhood isn't too good. Maybe people are just leaving the area and there's less demand, right? So you want to have a good location. You want to understand location. And you want to understand that people want to move into these areas, which creates higher demand. If people are leaving your state, there's less demand, there's less money to be made because there's less people to bid on these said properties and raise the price and increase the value. So with that being said, there's a lot of benefits to real estate. For example, cheap mortgages. You can consolidate certain debts, even credit card debts, medical debts, student loan debts. You can consolidate all those things into your mortgage as long as you have enough value in the home to where you can offset some of the costs. The interest rate is going to typically be cheaper than a credit card that you would probably pay 20% or more on. Now your interest rate is 7% or below as of the making of this video, right? And for refinances, it's typically cheaper. So you'll probably be around 6.5% paying off a ton of debt. The problem with that is that a lot of these debts are going to be 20, 15, 30-year mortgages. And then even some banks offer a 25-year. So with that being said, you'll be paying on the same debt for a long period of time, almost your entire life, right? Hoping that your asset continues to increase in value to where maybe you sell the home and pay off all the debt with the equity in the home. That is a tough way to live. That is a tough way to stomach things. Just living off of debt and paying all that debt off while still being a consumer is absolutely horrid, and I would hate to live that way. But that is a way to technically get ahead if you've made mistakes and you're willing to learn from it. But most people who are consolidating probably haven't learned from their mistakes. I used to be a mortgage lender. I've heard some crazy things on how people are managing their money, their car costing more than their home, them wanting to consolidate that into their home for a cheaper mortgage payment. I've heard it all. It was absolutely horrid. But what I will say is that once they're really ready to turn that page, once they're ready to get their life in order, they will have the tools, they will know the vehicles, they will know exactly what to do to get out of those situations. Now, moving on. If you have a lot of equity in the homes, it's an asset. You want to protect it. You don't want somebody to come for your asset. One, you want to have insurance. Let's say your dog bites somebody. You want to be able to say, okay, I have an insurance policy so that if anyone is bit on my property and decides to sue me, they have to go through an insurance, file the claim, and they will be compensated appropriately for my dog biting them. And this is another reason why you also have to be aware of what type of pets you have. Although it's not a part of this discussion, if you have an aggressive pet, you need to understand that you can be liable for that pet, as you are responsible for it. And that is going to potentially cost you more than you're expecting, not just medical expenses, but also real life expenses if somebody were to get hurt. Now, if you want to shelter this asset, let's say it's already paid off, you can put it in your prenup. Any property that I own free and clear is mine and mine alone, right? But if you're still paying on that property, once you get married and you don't have a prenuptial agreement, it is now a marital asset because you're still commingling funds. You're adding married funds into that home in order to pay it off, which is no bueno, right? Now, a loophole to that is if you transfer that property into your business name and then you get rent from your tenants that then allow you to pay off that property, and then you state that any businesses that I had prior, any real estate that I owned prior or that the business owned prior is a separate asset to be paid and fixed up by the business itself. Makes perfect sense, and that may pass in a prenup. But you should seek your own lawyer, seek your own attorney, and seek guidance on that, because obviously I am not your lawyer, I am not your attorney, and most people are not that savvy to where they're going to put their properties in their business name, and most people are also not that savvy to where they'll even get a prenuptial agreement on certain things. And so protecting your assets, super important. Although that wasn't necessarily the topic of the video, it is important to understand how to do that. Now, you can pay less taxes on your properties as well by taking out a mortgage, by taking out a loan. Loans are not taxable. And so although you do have an interest rate associated with it, it is typically going to be far less than any taxes that you would pay, depending on who you are and what you plan to do with that money. All right. So it's important to understand how you're going to use that money. Again, I like using Elon Musk as a nice example. He took a loan against his company Tesla in order to buy X. And yeah, he's able to do something like that because it was the cheapest form of payment. It was the cheapest way to acquire that asset. And it was a business decision. So it was also if he were to purchase it outright, it would have been a tax write-off as well, since it was for a business. So with that being said, other ways to protect your asset would be liens. You can put a lien on the property, which means if you have a business in the second lien position, stating that the property owes money. A lot of lawyers will probably back out thinking, oh, this person already owes so and so, they gotta get paid first before we get paid, and so there's no reason to really file a claim because this person has no money, right? So that is another way to shield yourself from legal ramifications when you have liens, when you have all these other things, protecting your asset. Now, in the stock market, you can essentially do a lot of the same things. You can take out a loan, which means you're not going to pay the taxes. You can separate it and not invest more into it. That would not be commingling funds and marital assets if you're not already married and planning to get married. But unlike a 401k, if you already are still investing in your 401k and you haven't stopped, that's not necessarily going to work as a non-marital asset if you're still using marital funds to invest in it, unless your spouse also has a 401k and is investing in it. Then you can say, okay, our 401ks are separate assets because you're not leaving your spouse destitute, and that way you both can go your separate ways without having to split 401ks and Roth IRAs and things of that nature. So the stock market can be an amazing vehicle as well. It is widely used. It is an emotional roller coaster. But if you are in control of your emotions, if you don't care about missing out or the fear of missing out, FOMO as they call it, then you should be rock solid and ready to go. If you like this video, make sure you leave a like, comment, and subscribe to the channel. You know I post on YouTube, Rumble, and Spotify for podcasters, and I can't wait to see you on the next one. Peace.